GH once more. In this video we are going to treat how to know when to actually buy or sell, how to generate signals for yourselves, indicators, moving averages, and we'll look at moving average 7 and 14, and we'll also look at moving average 68 and 200. Moving average. How to know when to actually buy or sell. We are about to commence an important aspect of the training. Here we would be dealing on analysis, technical analysis. You are not yet a forex trader if you can't analyze the market. Now we all learned in the basic stages in our previous videos that we just finished, that in forex you buy when it is going up and you sell when it is going down. But the big question is, how would I know that it would go up or down, and how would I know that it would go down or up? How to know when to actually buy or sell. Remember, from our definition of terms, going up is uptrend while going down is downtrend. Now, to know the direction the market would take is basically what we would be doing from now on, using all these listed below: chart patterns, candlesticks, Elliot waves, pivot points, and indicators, and etc. Now, indicators. Let us look at indicators. Indicators, as its name implies, are tools used in forex analysis that helps you know the direction the market would follow. It indicates whether the market would go up or down, because as a trader, if you know the market would go up or down, you can decide whether to buy or sell. Types of indicators. There are many indicators in forex market. These include moving average, stochastic, Bollinger bands, RSI, ADX, PSAR, MACD, ATR, and many more. Where to find indicators on MT4? Click on the sign at the bottom, which I have shown on the image with the arrow 1. Then you click on the F sign, which I have shown on the image with the arrow 2. Then you click on the sign F plus side, which I have shown with blue arrow, which is just beside the main chart. This is the next page you will see after clicking on the F plus sign on the previous page. All these are indicators. When you scroll down, you will see a list of more indicators. There are many indicators and each has different way it works. With time, we shall look at them one by one. In today's lecture, we are going to study a very important indicator in forex trading, which is called moving average. It is mostly called MA in short form. Moving average, which is MA, is one of the most popular indicators in forex. It is used by most traders at one point or another, depending on the strategy you are using. Many strategies of moving averages, that is MA, are discovered through trying and testing MA on different grounds by many traders. Let us add it to our chart. At this level, click on moving average. When you click on moving average, it will take you here. By default, you will see periods equal to 10, shift equals to 0, and method equals to simple. Now in this dialog box, change the 10 to 7 and the color to blue. It can be any color you want to use, but for the purpose of this studies, use blue. Click on done on your upper right hand corner. Next, click the chart sign I have shown with the arrow on the image on our right hand side. You will see something like a line graph appear on your chart, like the blue line on this page. Check out that blue line. Always note the color you choose. The blue line will be the only one on your chart. So let's now get to what moving average does and how it works. So on the chart on our right hand side, you can see the blue line, which I have shown with the golden arrow. How MA works. From the name moving average, it measures the average closing price of a particular currency pair over a specific period of time. Example, if you keep the period at 5, it means that it will add up the last 5 closing prices of the last 5 candles and divide it by 5. Candlesticks are those white and black bars on your chart. Search for candlesticks analysis strategy. That's our on our YouTube channel, Forex Farm GH, to know more about candlesticks. Now let us move on. Types of moving averages: simple moving average and exponential moving average. Now under simple moving average just gives you the direct average, just simple as the name implies. Example, let us say we set our USD JPY chart moving average to 10 periods and we are on a 1 hour time frame. Let's say all these numbers are the closing prices for USD JPY. That is 110.2, 110.4, 110.5, 110.6, 110.1, 110.45, 110.7, 110.3, 110.4, and 110.9. The chart would add up all these closing prices and divide by 10 and would plot it as a point. It would go back another 10 hours, find the average price and divide again by 10. This is done backwards till infinity. However, you don't need to calculate all these, as your chart software, the MT4, calculates and draws the line for you. That's the blue line we inserted to the chart. Now under exponential moving average. Now the other type of moving average is the exponential moving average. This is a weighted form of moving average. It gives more attention to the most recent prices, hence avoiding spikes. If I have 5 sets of numbers and I was asked to find the average, let us say the numbers are 5, 6, 7, 4, and 5. The average I would have is 5.4. In the same above set of numbers, if I switch the second number, that is the 6, that is the number 6, and we have 5, 27, 7, 4, and 5. That figure 27 would distort the average. From basic mathematics, they would all From basic mathematics, they would always tell you that extreme numbers affect the mean. This is where exponential average comes into play. Exponential average eliminates that extreme number effect and gives you a weighted mean. It takes into consideration the recent prices. Now remember, you don't have to do any calculation. Your MT4 does everything for you and draws it automatically. However, I am training you to rub shoulders with any trader anywhere you meet them, so that you can be able to discuss and not feel left out, either on discussion forums, etc. So we need to know all this and not just allow MT4 draw everything for us without even knowing the basics behind what the MT4 app is doing. We normally use exponential moving averages after a news event. News are a major factor that causes excessive volatility in the market. Example, NFP. They give extremely high closing prices because of the massive fluctuations in prices, and this could affect your moving average indicator. Let's now get to how to use moving average to trade moving average. Now that you have added 7-period moving average to your chart, follow the same process to add 14 periods moving average, and this time with color red. All you have to do is to change the number and the color. On this chart, the blue is my 7 MA and the red is my 14 MA. Now, of those two indicators you added, the one with the smaller number is called fast moving average, while the one with the larger number is slower than it. That means 7 moving average is faster than 14 moving average. There are more slow ones like 50 moving average, 68 moving average, 150 moving average, 200 moving average, and many more. The general rule is that the larger the period, the slower the moving average. Look at both MAs that I have added to the chart. You will notice that MA7 is closer to the candles than the 14 MA. What this is telling you is that the 7 MA reacts faster to price change than 14 MA, hence it is the faster of the two. How do you now make trading decisions with moving averages? Making trading decisions with 14 MA and 7 MA and 14 MA. In Forex, there is what we call the golden cross. This golden cross occurs when the faster moving average crosses the slower one. Now the direction of this cross determines where the market would go and tells you whether to buy or sell. Now watch where my arrow on the image is pointing. If you notice that point, the 7 faster MA crossed the 14 MA from its top downwards. From there, you see that the price started going downwards. That downwards cross is a good signal to sell. From this page, you can see where I have indicated with the blue arrow. If you notice that point, the 7 faster MA crossed the 14 MA from its downside upwards. From there, you see that the price started going upwards. That upwards cross is a good sign to buy. So what we tend to spot in the market when you see Forex trader who who uses moving average scrolling through their chart for long is to find that golden cross and key in. However, before we do this and key in, we need to first determine the overall trend. We don't just jump in. Moving average is always used to determine trend. It's also used to determine trend. So we need to determine the trend before we enter. Now we have to discuss another important concept that would actually determine our entry in Forex. That is what we call a trend. A market can be said to be trending either upwards or downwards depending on the predominant direction the candles tend to be moving. If the candles are moving upwards, we say the market is in an uptrend. When the candles are moving downwards, we say the market is in a downtrend. This is done by using the 68 MA and 200 MA. Add MA 68 and MA 200 to your chart using that same process we used to add 4 and 14 MAs. Use black for 68 MA and green for 200 MA. Set time frame to 1 hour so as to get longer chart. Observe if the candlesticks lie above the lines or below it. Take 68 and 200 MAs into consideration. Now if the candlesticks are below them, the market is in a downtrend, and if the candles are above them, market is in an uptrend. From the picture, black line is my 68 MA and the green line is my 200 MA, and you notice the candles are below it, and this is telling me that Euro USD is generally downtrending. After getting to know if the market is in an uptrend or downtrend by your 68 and 200 MAs, remember you identify the trend on longer time frames. Example 1 hour and 4 hour chart. After identifying the trend, you now come back to your smaller time frames, that is 5 minutes or 15 minutes or 30 minutes time frame, to identify your golden cross. Notes: larger MAs plus larger time frames equals trend. Smaller time frames and smaller MAs is equals to entry. In Forex market, even if a market is going upwards, it does not mean that it would just be flying up. Also, even if a market is going downwards, it does not mean that it would just be trending down to the end. It goes down a little, goes up, goes down a little again before going up again. So that is the way the Forex market moves. So it is better to identify the overall trend before entering so as not to enter into a fake out. Now we are done with moving averages. In our next video, we will be treating stochastic and relative strength index. These indicators are very important. That's why I'll be treating them both on the same video. They work together very much, and they are very accurate. So search for our next video on YouTube by typing in this video, this name, stochastic and relative strength index in bracket RSI. Search it on our channel and watch how they work as well. Thank you very much for joining us today, and subscribe to our channel Forex Farm GH, and also join our Telegram group. You can search us on Telegram, FX Forex Farm GH on Telegram. Click on the subscribe button to subscribe to our channel and join our Telegram group, and you can also share our videos. Thank you very much.